Hello, traders. It's 8 a.m. Chicago time on the 7th of January 2020. It is Tuesday. This is episode number 1666. Thanks for joining me again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So, today, yesterday's action was very interesting. We'll go over that in just a bit. This morning, really, the market sentiment is somewhat mixed to risk on ish. It's mostly mixed. It appeared that it appears as though the DAX is recovering quite well, up 89, trading at 13,203. The Euro stocks are also higher. There were several releases overnight. Let me pull that up. The European in the Eurozone, construction PMI came in strong in Germany, 53.8 versus 50.8, and retail sales came in a lot stronger than expected, 1% month on month versus 0.7 expected, year on year 2.2% versus 1.5. That's quite high. Inflation rate 1.3 versus 1.2, core inflation 1.3 versus 1.3. So overall, pretty strong numbers. The U.S. released balance of trade came in just basically in line. And then we're expecting factory orders in the U.S. and ISM non-manufacturing business activity at 10 new orders as well. There's a bunch of ISM numbers that are coming out all at the same time at 10 o'clock Eastern, 9 Central. And then after the close today, we get API crude stock change. The prior is negative 7.8, a draw of 7.8 million barrels. That comes out at 4:30. And then this evening, Japan gets consumer confidence at about midnight Eastern U.S., 11 Central. So that's basically where we are. It is it really is a mixed bag with slight risk off. The Dow is down 33 points, the Russell 1.9, the S&P 3.5. The Nasdaq is up though. The Nasdaq was the leader yesterday, was leading the pack yesterday. Communication services as a sector was relatively strong throughout the session yesterday. Led the push up, so did the tech sector, and the Nasdaq's enjoying a continuation on that. So that's where we are, and you know what's scheduled. Of course, the only surprise is whatever's tweeted or released going forward in the session. Let's take a moment and take a look at what was expected yesterday versus what we actually got. And yesterday, given that we were gapping below, the primary expectation is we're likely to push up into the 32.26 and a quarter MC point of control. But I did expect, given the lower lows, lower highs of the prior sessions, and we're still in range here with a gap, the expectation is we're likely to get tangled up at 32.26 and then roll over and start pushing towards the 3200 and the 3199 area. That did not happen at all. The secondary scenario is we get a gap initiative selling trade where we would drop, push into the overnight low, get into that 3205 area, and then potentially bounce up back into 3226 with a potential for a continuation higher. And what I talked about yesterday is that if we push through that 32-32-ish area, we are likely to start squeezing shorts with 46 and a quarter being the next main target up, and then 51, the prior all-time high. And yesterday, that's kind of like what we got, but really we did not have any pullback whatsoever. The market went into an open drive. There was hardly an opening swing. If we look at this on the tick chart, Let me reduce this a little bit. If we look at this on the tick chart, we had a very small flutter at the open, but really the delta is strong through most of the session, with the market really gaining on the rotations higher more so than the lower rotations. A clear way to see that is right here. This is measuring the rotation. So if I turn on zigzags, so you can see this first zigzag is 8.5 points right here, which corresponds with 8.5 points right there, and so on and so forth. So this pane here gives me an idea, and this is a price action indicator, so to speak, of what the rotations look like. Remember, rotations are kind of like an internal measurement of the success of the participants, the buyers and the sellers. So when the entire purpose of the market is a price discovery, and when we see that the price discovery is larger on the buy side than it is on the sell side, then buyers are gaining, and vice versa. And yesterday, you could see that the white far exceeds the orange. The market was in a trend, in a trend environment. This is a trending profile. If you look at the shape of the profile, you have many areas of minor balance and then just continuing trend, 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 trend. There was no consensus whatsoever yesterday, and the expectation is that's likely to continue. And it did continue higher overnight. We've pulled back a little bit. We're trading below the close of yesterday. But overall, that was a trend day up yesterday. We breached the IB high and continued to push through. We paused at some key areas, but not by much. I mean, yesterday, a clear indication that the OTF was active, the higher time frame was active. The only selling that came in was on the close, and that's expected. So we went and closed the naked point of control at 32.49 with a high of 49.50. And then today, the overnight point of control on a balanced profile is 32.49. No surprise there. Next is the 51. If you recall, the all-time high from December, and then from there, pretty much heading towards all-time highs in the S&P. So this, to me, this is just a market that just does not give two craps about bad news. It is a market that is really roaring and is pushing through whatever you throw at it in terms of news events, and we need to keep that in mind as I know many people are, judging the action and believe that it's kind of inflated. I just would never see the market that way. It is doing what it's doing. It does what it does. It does what it's supposed to do. And what it's doing is it's definitely rocking the shorts every time they pop in. So that's where we stand today. So looking at the order flow, the overnight session is quite noisy. There was a little bit of liquidity at 32.40, which we just took out with new overnight lows. Beneath that, we have some liquidity between 36 and 34. We'll see if that still stands. 35 seems to have liquidity that's stuck around a little bit, and then above the 32.58, and then more importantly, the 32.60 have been a staple for the overnight session. You can see that overall that liquidity has lasted since the open. So that's where we stand in terms of order flow. Not seeing too much in terms of clues there. Not seeing any huge collisions or anything like that. We did have a bit of a collision here against the prior close that caused the bounce, but not seeing anything significant enough to really discuss in more depth. So that's where we stand there on the order flow. Very, very important to see where the liquidity is versus our predefined levels. Now, to get into what we're expecting for today, let's take a look. For today, the normal expectation after a trend day is a likely continuation or balance. We do not generally expect the market to sell off the day after a trend day up. It has been buying after a trend day down in what is a secular bull market. It's just the market regime is such that any dip is bought. But this morning, expecting it to make an attempt lower, I'm looking to lean against this 35 area, very nice looking area. The 32, the 35 areas you can see here has been in action for some time. Uh, has been tested from below, from above 32, 32 to 35. I'm expecting it to potentially test down, but I'm really looking for a break higher into back into the 49 point of control and then a push through the overnight high to challenge all-time highs at 32, 59, 75, 60. 60 has some liquidity, so I'm expecting that to hold for a little bit and then pop before the market kind of settles back into the close. This is what we're looking at. There's nothing much on the calendar in terms of scheduled releases that I feel would disrupt, that would likely disrupt the normal auction process. So I'm not expecting anything there that would kind of hold us up. This may be quite aggressive on scenario one. Scenario two, open auction that pushes the prior high to give us a continuation trade, holds steady at the overnight point of control, pokes through, and then just sits sideways for a while as we have a resting day. However, the caveat is that this is Tuesday, and generally Tuesdays have a pretty good range, and I do expect that we're likely to see a little more. We did have some selling just now into the open. If we end up taking that back, testing the close a little bit, the third scenario is likely to be one where we would open up, test the prior close, push down, consolidate, and come back to 32.26 again before we bounce and hold steady. That's almost like a open test, drive down, although it can be an open rejection reverse type of trade. Not expecting the market to be out of balance today, so I'm not expecting a lot of aggression, but I do see a strong argument for shorts to be squeezed today. So that's what I'm expecting for today. Hopefully you're gaining something tomorrow. Tomorrow I'd like to. I'm going to start the session with a short trade wisdom segment of about 5 minutes, talking about hopefully something that'll set you up for the year. Just a mindset issue. Something that comes off of James Clear, an interview that I heard recently that, some things that I've experienced personally that are very important. I'll talk about that at the beginning of tomorrow's Trader Bytes segment. Okay. Other than that, of course, I invite you to. Whoa, what is going on here? I've got all kinds of screens going. I invite you to fill out the petition. I am looking to schedule a meeting with the CME. With the holidays, that became really difficult. People's travel schedules and stuff. Looking to schedule a meeting with the person in charge of the micro crude in the CME, and I'm hoping that I'll have an answer for those of you who filled out the petition as soon as possible. I intend to print out the petition and bring it into the meeting and just basically explain that this is a product that's very much needed. I like the way crude trades, but in its current size, you have to have a pretty sizable account. I'd say 30,000 or better to trade a couple of contracts. It moves quite quickly. I'll update you on that as soon as I get more information. Good luck today. Mind your risk. Keep an eye on risk, and then just to follow your plan. You don't have to trade just because you're sitting here. You're trading to follow your plan. You're not trading to make money, and you're not trading to get an adrenaline hit. Good luck.